let's look at the current situation we're in now. Inflation is high around the world, interest rates are rising, and there is a good chance that consumer demand may dry up in the near future. So, how will this impact growth equity? Well, in our August 2022 video newsletter, which you should subscribe to in the link in the description below if you don't already receive it, we took a deep dive into the recent Salsify deal, and we answered this question. To hear the answer, stay tuned. We'll show you by sharing our Mink Sites video newsletter. In this edition of Mink Sites, we will walk you through the Salsify deal, a recent deal where TPG led a group of investors to invest in Salsify. We'll go through the history of Salsify, followed by the details of the deal, and then we will analyze the deal. So let's get started with the history of Salsify. Salsify, which was founded in 2012, is a commerce experience-focused management platform that helps manufacturers, distributors, and retailers manage the content and communication necessary for e-commerce. For example, a brand manufacturer can update a product or offering at scale consistently across retail sites, direct selling marketplaces, and customer support platforms. Well, in 2017, Salsify raised $30 million in a Series C round led by Underscore VC, a community-focused VC out of Boston. The $30 million brought the total funding raised by Salsify to almost $55 million. Then in 2018, Salsify raised $43 million in a Series D round led by Greenspring Associates to help the firm invest more in R&D and continue its global expansion. On a side note, for those of you interested, Greenspring Associates was purchased by StepStone in 2021. StepStone is the same company that we talked about in our YouTube video titled LP-led and GP-led private equity secondaries, when we mentioned StepStone's involvement in the GP-led scrip sale with Vertex Ventures Israel. Anyway, back to Salsify. In 2020, Salsify raised $155 million in a Series E round led by Warburg Pincus to continue to accelerate its product development and international growth. So now let's move on to the details of the deal. The deal we're talking about in this video. Salsify closed a $200 million Series F round led by TPG through its Tech Adjacencies Fund, along with Permira's Growth Opportunities Fund, Neuberger, Berman funds, and CapTable coalition. The investment brought Salsify's valuation to $2 billion. Now, let's analyze the deal. Over the past few years, many traditional buyout firms have been raising growth equity funds to invest in growing firms such as Salsify. For example, Permira, one of the investors in Salsify, that is traditionally a buyout investor, raised $1.7 billion for its first Growth Opportunities Fund back in 2019, and at the end of 2021, raised $4 billion for its Permira Growth Opportunities second fund. Now, looking at growth of the economy over the past few years, especially in parts of the tech sector that exponentially grew during the pandemic, it's no wonder that more and more growth equity funds have been raised by both growth equity players and traditional buyout players. But let's look at the current situation we're in now. Inflation is high around the world, interest rates are rising, and there's a good chance that consumer demand may dry up in the near future. How will this affect growth equity? Well, it depends on the details of the investment, such as the business model of the companies and how the company's customers will be affected. For example, let's look at how Salsify could be affected by dried up consumer demand. Well, it could be good and it could be bad. It could be good because of Salsify's business model. Salsify is the technology behind the scenes that will help its customers optimize product management during the tough times. But it could be bad because if consumer demand decreases, many of Salsify's customers will be negatively affected, and some may end up going out of business. Investors, all signs point to an upcoming recession. Are you ready for it? My recommendation is for you to please proactively look at your current and potential investments to see how the company's business models and the company's customers will be affected by future market conditions.